Hey, this is Danielle, and today I'm going to be talking about a post-earnings trade in Tyson Foods. So you can see that this is a pretty bearish chart, right? We topped out around $100 a share in February of 2022. And basically, ever since then, it's been on a downward spiral. Well, you can say that it did come up and retest that high and failed, which, again, is pretty bearish. But ever since then, it's been on a downward spiral. So, over the course of the last couple earnings reports, we have one, two, three, four in a row now. We've seen some pretty substantial gaps lower, 5.2%, 10.3%, 9.9%, and then this most recent 2% gap lower. Now, with these moves, basically what I'm looking at is obviously, the stock's on a downward spiral, but is there a move that we can trade here in this stock now that the company has reported earnings? And I think that there is. So if you look at the actual earnings report, they were estimated to earn 33 cents. They made 37, so not bad, right? But do you see what it did? Do you see how it has been in this downward trend? It rallied after earnings. It rallied directly into the 50 simple. Huge wick at the top of the candles, just basically, big reversal. And at this point, the stock is down, negative, over negative 2%. After trading up into 48. And if you look a little bit closely, you can see that there's a squeeze setting up, in addition to the fact that the volatility has collapsed here. So what this means is that now that the earnings report is through, we can basically trade the swing trade setup plus the combination of a post-earnings move. So when you look at the post-earnings move stats up here, this is a chart of Tyson Foods over the last 2 years. The stats that I have are demonstrating that in the 8 days post earnings, this is the time frame right here, it's highlighted in red. Over the course of the last 2 years, on average, the stock has been down an additional 3.5%, which is about another $1.67. So we're just now, entering that time frame today because this stock reported earnings this morning, has this big wick on the top of the candle. And then, additionally, it has the squeeze. So anytime there's a squeeze plus a post-earnings or a pre-earnings setup, it just kind of adds a little bit of extra juice to it. And so basically what you can do is you can say, well, the stock has been in a long-term downtrend. The last couple earnings reports have not been good. Sure, this report was all right, but when they reported and the report was all right and it traded up into resistance and it hit that resistance and immediately sold off, probably because you have people trying to get out of the stock, what that means is that it's a bearish sign and there's likely to be post earnings continuation to the downside because people say, we've been waiting all quarter hoping this thing might come back. It tried and it does a womp womp move and just rolls over. So what do you do? Well, you can throw some levels on here. So you can see that there's a Fibonacci level. You're going to draw from here to here, which would have given you these targets. But you see now we have a higher level that we can use. So we're actually going to erase that and say, all right, low to our most recent high. Most recent low to most recent high, and that's going to give you some projection targets. So we're already through this retracement and this retracement. You're sitting on this resistance zone right now, but you're trying to break through it. So your next downside targets are going to be 45 and then 43, 48, 43, 84, and then 42, 44. So basically what I do with this is I just, you have to start off with support. If you hold support, then obviously it's not going to keep falling. But every time you break support, you target the next zone. So if and when this support breaks, you're targeting this zone. If you get here and if you pause, then you could scale out, especially if you start reversing higher. But ideally, you get there, you pause, and then you break down to the next zone. And this would be a new this low is the most important to break at 45 because that's where that support is. And if that breaks, that's when you should really see a flush down into this zone. After that, I don't usually use this full extension target, but if it gets really crazy and it really starts falling apart, then that's the zone that you would use next. So typically I would scale out on something like this. Um, Ideally targeting right here, but sometimes what will happen is it'll hit support and it'll hold support and then it'll start going back up, and that's when you just take off your small profits. So with this squeeze is not fired yet. I think, good price target on this is going to be 43.84. So how would you trade it? Well, there's a variety of different ways that you could trade it. I think that the long puts in December make sense. You could look at these slightly out of the money puts, or just these in the money puts right here. I think these Delta 65s are going for a pretty good price. They're going for $2.55, and they're already $2 in the money basically. So I think that those are pretty good value. Another thing you could do is you could set up a butterfly, but I think that this is a smaller stock, and so the pricing here is already pretty cheap anyway. There's also not an exact center strike that you can use at that price target, because the price target would be basically 44. So I think in this one it makes the most sense just to buy the long puts and scale out as I mentioned. So that is all I have for you today. Thank you very much for joining me, and I look forward to seeing you in the next video.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.